I have lived long enough to know that opportunities must be seized or they will be lost.
Hello and welcome back to Wall Street Radio. I'm your host, Tanner Yarton, here with Dan Young. And in this episode, we're going to be talking about the crypto reserve announcements that should be out today, as well as what's come out over the last couple of weeks, alt investment markets and why they're seeing such a large rise right now, and kind of the similarities that we saw to 2021, insider trading in some of the primary markets, especially crypto, and corruption that might be occurring in the new administration. Enjoy.
Hold, please. I need to buy something real quick.
My guy.
This market is sinking like a ship.
And you're backing up the truck?
I'm not backing up the truck, but I'm taking some shovels of shit here and trying to start
a family-friendly podcast. You can't. There's no swearing.
The limit got filled. We're good.
Bullish.
What's
on the shopping list?
The big three on the shop, actually big four, I would say, are Guidewire. They raised guidance, their fiscal year guidance. So surprise earnings yesterday, raised fiscal year guidance, and they're down 6%. So adding limit orders on the 200 SMA there, which it just tagged, grabbing some CyberArk, grabbing some Dynatrace and some Tyler Technologies, and just slowly starting to add into some positions. So we'll see what happens.
Nice. I'm still waiting on Crowd. Like to see that below 300. I think that's a realistic spot to start loading the boat on that one, as well as VST, VRT. Want to see another 5 or 10% off those to make a realistic opportunity for it. But in any case, yeah, lots of opportunity starting to pop up. Again, uncertainty driving this market right now, which is going to cause huge swings in both directions. It's not, I mean, if you're a volatility trader, you're in your bag right now. But if you're trying to position for swings over the course of a week or 2 weeks, you're going to really struggle in this market. So definitely looking for value only.
Yeah, VIX has been climbing steadily the past 8-9 trading sessions, which we haven't seen in a long time. Whenever it has that very slow staircase type grind, it's pretty suspect. So I think it was at 15. I think it was 8 or 9 trading days ago. It was at 16, 15, and now it's at 26. And so just day by day, inch by inch, it's increasing. And now the S&P is at, SPY's at 566. It's broken well below the 200 SMA. It looks like a bear's best friend. We've got just a little bit over 4 hours until the close of session. What we've historically seen is any day where it gets like this, it does close back strong, and there's a couple moments of bursted energy that get us back above the 200, because we haven't officially closed below the 200 going back to October of 23. So if that actually happens here, we could see another gap. I think we could see a gap down on Monday, which would be really interesting, just given everything that's happening.
Yeah, that's the tough thing about entering positions on Fridays, unless you're already in them and just kind of averaging in, is the weekends lately have been brutal to hold through. I mean, you can get help in either direction if you're long or short, but just the volatility over the weekend has been so amplified in this new administration that it makes it very difficult to enter anything on a Friday and give yourself a reasonable cushion to want to swing that over the weekend or hold those positions through.
Yeah, without a doubt. That's why, these positions that I'm taking small bites in right now, I fully expect actually to be red on them for the next day to 2 to 3 days, but maybe even longer, but it's all a long-term hold. And at some point for me, whenever a growth stock, and especially one that's built into value that I like, it gaps up on earnings. And then if it breaks down below the 50 and then it breaks down below the 200 and there's just this aggressive selling, I'm now getting into a position that is already 20 to 25% discounted. And long-term wise, if you're in this for 3 to 5 years, which most of these positions are for me, it just makes a lot of sense, in my opinion, for me to start adding slowly. But if you're not ready to stomach it, it's going to be pretty brutal because, yeah, I mean, if we gap down another 1.5-2% Monday, these names are going to be, I mean, I think we're not going to be in crash status, but we actually might be in crash status because it is escalator up, elevator down. And that's what we've seen the past week. I mean, it's been pretty brutal out there, especially today. I mean, the S&P hasn't had any type of life. And given it's a Friday, I actually don't expect it to.
Yeah, and really all this comes after the false breakout to all-time highs, which is something that we've talked about on the newsletter a number of times. When you get that false break and price isn't able to sustain the new high after a long base, I mean, the escalator down can be quite violent. So I think that's what we're seeing play out right now. Now it's just a matter of finding names that are approaching levels of value that make sense from a risk-reward perspective, not expecting it to be like a tight risk type setup, but just recognizing that you're buying at a good value. And even if you experience, like you said, a couple more days of pain, it's longer term holds, stuff that's just fundamentally aligned with your system. But in any case, today is supposed to be the crypto summit for the upcoming crypto strategic reserve. It's coming out. We were just waiting for Trump to speak for like 25 minutes and he didn't get on. So we decided to rip the pod anyway.
Yeah. One thing I did want to say, and we will segue to crypto, but just interesting enough. So for a lot of my long-term portfolio holdings, some of accounts I have open for some of my nephews that I create, I put a lot of their money right now into VYM, which I've talked to you a lot about, which is Vanguard's high yield fund. VYM is green today, it's just interesting because the names on there, you would expect to rotate into value. Like what is strong today? Utility is strong today. Energy is strong, and VYM being a lot of their holdings like in that area, like a J&J, a Coke. But nonetheless, it's just interesting to see that one showing strength, even in such a bloody market. We are seeing strength amongst some of these high yield names. So it's not all doom and gloom. It's just, I think there's this huge rotation happening where safety and security is taking priority with investors. So I just wanted to point that out because, like, for you and I mean, we've talked about VTI, VYM, and like some of the distributions you have in long-term portfolios from that perspective. And I think this is a good reason why you diversify in your accounts from total market exposure to also like selective yield-based exposure. And so, yeah, just interesting perspective.
Yeah. But yeah, so to segue into crypto, which is kind of the main talk of the most recent article. We've got Digitalizing Fort Knox came out today, which goes through what is the crypto reserve. I've gotten a lot of questions, not necessarily from other traders or people who are interested in markets, but more so just like family and friends of like, what is the strategic crypto reserve? What does that even mean? Why does it exist? And does it even align with the current administration's goals? And I think the short answer is yes, it does, in the sense that it aligns with America's history of always getting involved in things, even if they're not necessarily something that that has like tangible value on the other end of it. That's kind of the United States' MO, is like, oh, people are interested in something, we're going to get the biggest slice of it because that's just what we've always done. And you know, the crypto reserve is no different. We want to participate in the digital market, and we're doing so via the crypto reserve. And the nice thing is we're using funds that were seized in various illegal activities. The United States government, I want to say, correct me if I'm wrong, but 200,000 Bitcoin on their own from just seizures over the years. And that's going to be the foundation of the reserve. And then some of their other assets are going to be converted to the other coins that are going to be in that reserve as well. Again, all from seized assets at the beginning. Whether or not they actually pump money into it, I'm not sure quite yet. We were hoping to get that information today, but it doesn't look like we're going to have Trump on, because he's still not on, and it's now been an hour since he was supposed to go live. So yeah, we'll just have to wait and see on the specifics of that. But what it is, why it exists, is all broken down in that most recent article on the Substack.
Yeah, you're right on with the 200,000. It's about 213,000 Bitcoin that the US has, followed by China, which has 190,000. And then it's a pretty steep drop off from there to the UK with 61. 61,000 Bitcoin. It doesn't surprise me. Yeah, it doesn't surprise me that Trump has taken forever to get out here. The market is getting smacked around. Could totally see him canceling this speech just not to add fuel to the fire as to a market pullback. Unless he comes out and he's like pumping QE and he's sending out checks to everyone, then I don't think he's going to say too many, things today, at least, because of just, again, like the heightened concern in the market. But for example, when you're writing this article, I think it's important to go a little bit into a deeper dive with the listener today. So what is, like, we talked about the downstream a lot, the impact, right? Which is what I always care about. We talk about a strategic crypto reserve. I've said multiple times my thoughts on crypto and the fact that I am not a crypto savant. I do not know that much about it. I never got fully into it. But the thing that always interests me is I'm never going to be fully anti something. I'm just going to try and capitalize on the thing that will show me the value. So, for example, like the energy production that will needed to be had for a crypto strategic reserve to exist, or the infrastructure behind it. So, what are some of the roots that stem off this, or the potential roots that stem off a crypto strategic reserve?
Yeah, so number one is miners. Right now, we are the number one mining country in the world, followed closely by Russia and then China and some of the other European nations. And so there's obviously an ecosystem there that needs to be fleshed out. Most importantly is energy and energy demand. It costs a lot of energy to mine crypto, very similar to like AI and data center training, very energy consumptive. Right now, our two top states for that are Wyoming and Texas. So I think it's fair to assume that commercial real estate is going to increase in those two states, regardless of what happens in like the housing market, so to speak. Also, just bolstering our grid as a whole, right? If we are going to be a dominant force in crypto markets around the world, it's fair to assume that, yeah, we do have some privatized mining going on in some of these states, but at a government level, we might need to stimulate that sector a little bit more and just get a more robust relationship between the government and our private industry that's kind of booming right now. And again, that all ties right back into the energy thesis for AI and infrastructure on that regard. So in both cases, you have now additional reasons for the United States to be involved in energy production here in the US. And I think that just builds into the long thesis and kind of that QE and stimulus for infrastructure.
So let me ask you this. Why even have this? Like, from my perspective, it's like, is it just a pump scheme? Is it a showing of support to the people that we want to, the president and his cabinet want to be new age and like push forward? Or is it just this game and this cycle? Because for me, it's like, is this really the most important thing we should be doing right now?
Yeah, no, I don't think it's the most important thing that we should be doing right now. However, it's important to remember that the United States does have a history of doing things just to be first, just to be the biggest. That is so cliche and so American. So I think from that perspective, we're going to do it regardless. People are interested in it. The global economy has now caught on. There's institutional products around crypto. And, if you look back in the early 2000s when the financial and investment markets were being heavily regulated, it reminds me very much so of that. Like, a lot of people are making money. The government's like, oh, we need to be there. We need to understand it. So I think from a perspective of just being first and being active in a market that's booming, that's cliche American. But from a regulatory perspective, we kind of need to have some sort of presence if we're going to regulate and if we're going to start to curb some of the issues with crypto. And I don't think you can do that if you don't have some kind of basis in the government to carry out those tasks, right? To bring on the right teams, to start to understand better what's going on. Because over the last 4 years, we've seen a tremendous amount of scamming. We've seen a tremendous amount of just kind of like crowdfunding and gambling going on in crypto markets. And I think the government views that as a problem. They haven't for the last 4 years, but I think in this new administration, they're viewing that as an issue. And they're building this base and the strategic crypto reserve to then apply regulation down the road, bringing on the right people like their new crypto czar, David Sachs, who's been in this space for a number of years. So I think you kind of have to have something on the government side that says, hey, we're interested in this and we're for this, to then go in and apply regulation.
Yeah. The one thing that concerns me, as you brought it up, which is the retail exposure to crypto markets, and like whether it's been alt investment markets or just in general, the flood of participation in these high risk type of association trades and like participation in that. I think about sports gambling. I think about all these very hazardous, risk heavy hobbies slash like habits that people get into, and they become vices. Like I've seen people for the past couple of years lose all of their net worth doing crypto market, highly leveraged trades or even sports betting. There's kind of this theme with the younger generation, and not that, older generations don't participate in betting, but there's definitely more of a conservative feel around it based off the legality at the time. And now that there's this huge, wave of making sports gambling legal, kind of coinciding with these alt investment markets and coins getting rugged and being created and going, 1,000,000%. And then, for example, like the Trump coin completely getting diabolically demolished and people losing all this money. Like for me, it's a bit of a concern about what is the future of the market. And I just don't know if something like this helps or hurts that. Like if the government has this strategic reserve that's basically focused on cryptocurrencies and kind of accepts it and acknowledges it as something that's substantial and real, and it gives participants, the idea that they can continue to gamble on these like side altcoins in hopes that they get added to the reserve, or, whatever it is. It just has this kind of iffy feeling to me that this is a very gray line we're walking on. And yeah, I just don't know what it means for future generations who are going to try and manage money, but also the chaos around like the markets.
Well, I think first and foremost, it just shows how much money is still out there, right? If people have the money to spend and gamble and try all these different things, it reminds me of 2021 when there was just a ton of money going into like NFTs and alt investments. I mean, we've been seeing a huge uptick recently in like Pokemon cards, Magic the Gathering, like you're saying, alt investments. And I think that just shows a state of how much money is on the retail side still floating out there that needs to be taken out of the market if we're going to see like a real big kind of pullback in traditional asset markets. So
Yeah.
for the future, I think this ebbs and flows, right? You have capital flows in longer term cycles, and right now we're in an upswing of there being money out there in the market for people to spend. I mean, the caveat to that is delinquencies are going up on credit cards. Credit card debt is absolutely ripping through the roof. So that's certainly maybe where money is coming from that's not really being accounted for. So we might look at this as, oh yeah, there's a lot of money out there to be gambled, but at the same time, people are just taking on loans like never before. So even with high rates, which is very surprising.
Yeah.
So I think for the future, what this means is like long term, I don't think this has too much of an impact. I think, again, this ebbs and flows. In the short term, though, it just shows that there is still a lot of speculation in this market, which means that there's a lot of money to be deployed in this market, right? If there's no money and nobody has jobs and nobody's making anything, then you wouldn't be seeing so much gambling. You wouldn't be seeing so many alt investment purchases and things that are less liquid, right? As soon as the illiquid markets start getting liquidity, that's how you know you're at a period of time where there's some fluff or some froth in a market. Would you agree?
Yeah, I'd agree with that. I guess the bigger question I have is, does that change with future generations? So I completely agree. Like the more money out there from a supply perspective, it's going to be used on more high risk. Like it's going to be used more haphazardly, right? Just being thrown into random things, a slot machine, if you will. But if that's a habit that's created, and it has been created with this generation that has gone through COVID, has gone through stimulus checks, is that going to change? Like, is their behavior going to change, or is that now a behavior that's already set in stone? No different than someone who works out for 4 years and then, the gym closes. Are they still going to work out? That's like how I see it. Like, are people now going to go live paycheck to paycheck and still try and throw their money into these alt investments? And that's where I just wonder if the wealth gap especially is going to continue to grow, and we're just going to see this widening of the lower and middle class as they're the ones that typically turn to these very quick get rich schemes like sports betting. And I mean, the crypto, I've never taken part at all in the crypto market, like any altcoin or I like don't even know how. I think I have a Coinbase account. I have like a little bit of Ethereum on there from 3 or 4 years ago that I bought. I haven't looked at it in probably a year and a half. Um, but like, I just can't imagine putting myself in a position of buying one of these meme coins and then getting rugged and then going. It just, to me, it feels like penny trading. And I guess from my perspective, penny trading has always been frowned upon. Like, it's always been this thing is like, it's kind of a scam. It's a dip and rip. It's a cash grab. Like, if you're not in, if you're not in and out really quickly, you're going to get swallowed alive. I know people are understanding that more and more about these meme coins, but there seems like there's a lot more participation from a retail perspective with the younger generation in meme coins than there was in like these penny stocks, which is what my concern is.
Yeah, that's a great point. I mean, when I started to get interested, I mean, obviously my background's a little different in the sense I grew up in a traditional investment family. But even still, when I first was getting into trading on my own, like without my dad kind of helping me out, it was, I mean, we were trading just crap stocks, like
Yeah.
random bios and just nonsense on catalysts and whatnot. And I think that's just the modern day penny, is like meme coins are the modern day penny stocks. And I think it does two things. Number one, it brings people to the market, which is good. Like I like to see more participation in the market. The more people that are interested in investing or trading or whatever, I think that's all positive, because over the long term, like the more people that are investing, I think the better off they are as like just human beings. Like you were saying, the wealth gap is only going to widen with more gambling, but there are a percentage of those people who convert. They get a taste for it in meme coins and crypto or penny stocks or whatever it might be, and then they convert over to more realistic strategies and actually exploring like what's going on in the market. So from that perspective, I enjoy that there's people coming in, but it does bring up a great question of like, is all this gambling, like what is the impact going to be, and does this widen the wealth gap? And I absolutely agree. I think it will continue to widen the wealth gap. It's like playing the lottery.
Yeah. There's definitely the benefit of, if we do the crypto reserve, or which we will, and it gets very legitimized, maybe we stop seeing a lot of the creation of these altcoins. And like, for me, it's about the rug pulls, because you can't have that in a penny stock. The closest thing you can have to that is they put out an offering, right? We all know what that's like. Is like when you're younger and you're chasing these stocks and they're at $1, they go to $6, and you think you're on top of the world, and then after hours they announce an offering at $2 and the stock drops dramatically. Like, that's what you expect, but you can't be like fully rugged, like where the cost is or the value is zero, right? That's one thing that just has a lot of weird stipulations to me. So I guess one of the benefit, I mean, like if I'm being optimistic, maybe I could think about the crypto reserve actually legitimizing more of that market from a altcoin investment standpoint, and saying, actually, and really actually going after the people who do these setup and schemes where they just create this coin and then they rug it and they take billions or millions of dollars out of the hands of people. That to me just seems more like a pyramid schemes. That's like a scam. Like, there's no way about it from my perspective. So that I would just want to see that stop.
Yeah. And I think maybe that's one of the steps down the road that's going to come with the crypto reserve, is like stopping just any Joe Schmo from creating a coin and listing it on an exchange and allowing people to gamble on it essentially right off the bat. I think that will come to a close, kind of like how ICOs came to a close a few years ago, how you couldn't just launch a new coin because that there was a tremendous amount of fraud occurring in that space with like more mainstream cryptocurrencies, where guys were like, yeah, we're going to do a initial coin offering, which is like the equivalent of an IPO, and essentially just rugging people. And there was no regulation against it. So they were allowed to do it.
Yeah. See, we talk about corruption. That also goes into some of the insider stuff we've seen recently, with the whole strategic reserve announcement and that trader going super leveraged long on like 50 million. Was it Bitcoin? And ETH.
Yeah, Bitcoin and ETH. So in the article, we did include a small segment that discusses some insider trading that was occurring around the announcement of the strategic crypto reserve. And there was a trader who went long on leverage, $200 million worth of Bitcoin and Ethereum long the day before the announcement was made. The announcement's made, all these cryptocurrencies go up anywhere between 10 and 60%. And then that individual immediately flips short that same day, going into the market open the next day. And obviously, you flip short, all of that stuff fades off as the week starts, and ended up banking well over $1 billion in gains on those longs. So, you know, some people might say, oh, it's just a coincidence. There's no coincidences in this stuff. I mean, you and I have been in the market long enough to know when you see random volume pop up the day before a big announcement for a stock, somebody knew something there. And that was definitely a little bit of insider trading or corruption going on.
Yeah. And so this is probably a novice question, but I honestly have no idea. Does like the SEC and CFPB and any like type of regulatory agency, do they oversee a lot of this alt investment / insider trading corruption? Is that something that they can manage the same way that they manage like an open exchange?
I don't know, but I would assume no. Like, given the fact that in 2021, when I was dealing with NFTs and crypto and like arbitrage, because there was some nice arbitrage in those markets back then. When I was doing my taxes, I mean, nobody knew what they were doing. And even to this day, when I still report on my crypto holdings for my taxes, like even still my accountant's like, yeah, the government still isn't quite under control of like what's going on here, and recognizing like what those gains are, and certainly not well enough to be able to do investigative research into like potential fraud or corruption or insider trading that's going on there. So while I don't know the specifics on that, I would assume no, just based on personal experience.
Yeah, it seems very convoluted. And also, again, maybe a positive of the reserve will be that some of these federal agencies become more in tune with corruption and insider trading, which it's always going to exist. It's always going to take place. I just, again, see it as like a very slippery slope, especially with something like a crypto market and alternative investments that could be unregulated, and it could cause a lot of havoc, especially, the more money and attention that they get.
Yeah. And again, I think that's why the strategic crypto reserve is really just a Trojan horse for regulation in these markets, which is good. Like I think it'll slow down a lot of what's going on in those markets. That's just causing the evisceration of wealth for the unknowing and the mass creation of it for those taking advantage.
Yeah, and then we just have the time old question, right? Regulation of Bitcoin and of cryptocurrency, does it undo the value of those things?
Yeah, I think it certainly undoes the volatility of it. Another piece of the article was relating Bitcoin versus broad markets and seeing it as a correlation coefficient. And, if you'll look back over time, in the early days of Bitcoin, there was almost no correlation between the rise of Bitcoin and the rise of markets, right? You were seeing way more volatility in Bitcoin as it was mostly just a retail trade and people buying it or selling it based on halving cycles. And now you're seeing almost a perfect one correlation between Bitcoin and broad markets. So yeah, the volatility is certainly being brought down. I don't know if that means that price also gets brought down, but it will certainly kind of cull the large swings that I think crypto has seen, especially Bitcoin has seen over the last decade or so.
Yeah. I guess time will tell, right? How these things shake out, because 2025 has already been an explosive year. It's really tough to think that, I mean, 2 months ago, it was January 6th. He's been in office now for still like only 8 weeks, 9 weeks, and it's felt like there's so much happening. I feel like by the time we get to June or July, there's going to be 10 years worth of different things happening and like coverage and development. So we're going to stay on top of it as much as we can. I just looked at the market again, and it's still kind of bottoming out and surfacing around that 1.2% down for the day. So I doubt Trump's going to come on. If you want to just leave it at this, that's cool with me.
Yeah, I think just to close it out, again, that article did launch this morning. So go ahead and check that out right on the Substack. We've got another couple of articles coming out over the next few weeks discussing semiconductors and robotics. We will have podcasts 3 days next week. And on Monday, actually, I'm glad I remembered to put this in. On Monday, we will be having a special episode with my brother, who has a real estate team down in New York City. He's going to come on. We're going to ask him a little bit about the housing market, kind of get his opinions on what we're seeing across the United States, what we're seeing in New York specifically. And that's absolutely going to be one you're going to want to check out. We will have video on for that one. So yeah, look forward to that. But without further ado, we will see you guys later.
Now watch this drive.